Is the real estate bubble about to burst? What if geopolitical tensions lead to global turmoil? Dive into Nick Gerli's insights on the crumbling housing market and Doug Casey's alarming forecast of a potential World War III and Greater Depression. These expert predictions could reshape your financial future. Subscribe now to stay ahead of these imminent threats and hidden opportunities. Today on Financial News and Review, we will summarize the following videos. From Adam Taggart, Thoughtful Money, we have Home Prices Are Falling in More and More Markets Now, Nick Gerli. From David Lynn, we have It's Turning into WWIII, The Draft, Greater Depression, Could Return, Doug Casey. Welcome to Thoughtful Money, where Adam Taggart brings insightful conversations on crucial financial topics. In this episode, Adam interviews Nick Gerli, a noted housing analyst and founder of Reventure Consulting. Nick is a well-respected figure in real estate analysis and the creator of the Reventure app, making his insights on the U.S. housing market particularly valuable. Nick brings an unbiased and data-driven perspective to the conversation about the current state and future of home prices. Nick Gerli argues that the U.S. housing market is entering a downturn, with significant declines in home prices already evident in several markets. He asserts that many regions, especially in the Sun Belt, are experiencing inventory spikes and declining buyer demand, signaling the beginning of a substantial market correction. Contrary to hopeful expectations, minor rate cuts by the Federal Reserve are unlikely to invigorate the housing market, and the downturn may be more profound and prolonged. Here are the key points discussed by Nick Gerli. Current state of the housing market. U.S. housing prices are 30 to 35% overvalued compared to long-term norms, with the average price still rising nationally. Specific markets like Florida and Texas are witnessing significant inventory increases and price declines, while others, such as New York, have stabilized with less overvaluation. Contradiction to popular narratives. The common belief that falling home prices will bring buyers back quickly is not materializing. For instance, Austin and Boise show no rebound in buyer demand despite price drops. Claims of a national housing shortage, particularly touted by entities like Zillow, are misleading. Instead, inventory is rising in nearly every state, with dramatic increases in places like Arizona, 68%, and Florida, 70%. Impact of mortgage rates. A minor reduction in mortgage rates, such as a cut to 6.5% by the end of the year, is unlikely to entice buyers back into the market given current high unaffordability and poor buyer sentiment. Even substantial cuts will lead to an increased inventory spike due to more homeowners listing their properties, exacerbating the downturn. Investor activity. Investor purchases have plummeted by 60% from their pandemic peak, with many investors now selling properties at a loss. Notably, institutions like First Key Homes are selling homes 25% below their purchase price from just 2 years prior. Markets with high concentrations of absentee-owned properties, such as parts of Florida, are especially vulnerable as these owners face increased carrying costs and may be more likely to sell. Nick Gerli made the following predictions. Continued inventory increase and price decline. Inventory levels will continue to rise, particularly in overvalued markets like Florida and Texas, leading to further price drops. For example, inventory in Tampa, St. Petersburg has doubled over the past year, a clear harbinger of falling prices. Institutional and investor sell-offs. The trend of investor sell-offs will continue, pushing down prices further. This will particularly impact markets with high investor activity and recent speculative buying. Impact of potential recession. A recession could significantly exacerbate the housing downturn, leading to increased forced sales and foreclosures, especially in markets already experiencing high inventory and low buyer demand. Nick Gerli emphasizes the need for buyers, sellers, and renters to approach the housing market with caution. Buyers should exercise patience, especially in the Sun Belt, as market corrections afford better buying opportunities in the coming months. Sellers need to be realistic about pricing in a declining market. Renters may find improving conditions and should weigh the benefits before deciding to buy. Overall, Nick's insights suggest that the housing market is on the precipice of a significant downturn, with broader economic ramifications in the event of a recession. He encourages all market participants to stay informed, utilize robust data tools like the Reventure app, and approach decisions with a strategic mindset. Welcome to the David Lynn channel. Today we have a riveting discussion with Doug Casey, the founder of Casey Research and the author of several best-selling books like Crisis Investing in the 80s and Crisis Investing for the Rest of the 90s. Doug is known for his sharp insights into economic trends and geopolitical issues. In this episode, he delves into the alarming prospect of a World War III scenario and the potential for a greater depression. Be aware, Doug is typically skeptical of government policies and often critical of mainstream Western perspectives, framing him as a libertarian voice in economic discussions. The core thesis of this interview is that the world is teetering on the brink of World War III, spurred by escalating geopolitical tensions and ongoing economic instability. Doug Casey argues that NATO's, primarily the US's, aggressive stance against Russia is cornering Russia into a defensive posture, heightening global risks. Additionally, he predicts a major financial collapse or greater depression, citing systemic flaws in global economic policies, burgeoning debt levels, and rampant inflation. Here are the key points discussed by Doug Casey. Geopolitical tensions and risk of World War III. Doug states that NATO, essentially the US, has cornered Russia, forcing Russia to bolster its military, including drafting civilians. He suggests this tit-for-tat dynamic could lead to a larger conflict. He highlights historical promises made to Russia that NATO would not expand eastward, a promise he believes was broken, leading to current tensions. Casey warns about the provocative nature of expanding NATO up to Russia's borders and criticizes the Maidan Revolution of 2014 in Ukraine as a triggering event. Domestic and global economic instability. Doug discusses rising inflation and debt levels, which he argues could lead to a major economic collapse or greater depression within this decade. He critiques modern monetary theory and the continuous printing of money by central banks, claiming it will result in uncontrollable inflation. Casey points out the failure of modern regulatory frameworks to effectively manage economic stability. Views on conscription and the draft. Doug criticizes mandatory national service trending in several countries, including the UK and France. He deems it an infringement on individual freedoms and a form of slavery. He argues that a country needing to force its citizens to fight is one not worth defending. The mismanagement of national security and defense. Casey calls NATO an outdated and provocative entity that should have been disbanded after the fall of the Soviet Union. He frames the US as the most dangerous country in the world today due to its aggressive foreign policy dictated by neoconservatives. Doug Casey made the following predictions. Potential for World War III. Doug foresees the situation in Ukraine escalating into a broader conflict, potentially dragging other nations into a World War III scenario. He supports his claim by pointing to the growing military buildups and conscription policies in response to NATO's stance against Russia. Greater depression. Casey predicts a significant economic downturn or greater depression, driven by unsustainable debt levels, unregulated monetary policies, and economic mismanagement by governments. Uranium rising. Doug suggests uranium as a highly valuable commodity in the near future, emphasizing the eventual need for nuclear power to meet global energy demands. Doug Casey wraps up by reinforcing the necessity of awareness and caution in these turbulent times. He calls for a reassessment of current economic and defense policies, advocating for less interventionist strategies and more responsible fiscal management. He highlights the importance of strategic investments in undervalued assets like uranium and stresses the need for individual preparedness against potential economic and geopolitical upheavals. In this enlightening discussion, Nick Gerli outlines the looming crash in the U.S. housing market, highlighting significant price declines and rising inventories, particularly in the Sun Belt. He suggests that minor reductions in mortgage rates likely won't rescue the market. Doug Casey provides a stark warning about escalating geopolitical tensions, predicting a possible World War III and a greater depression. He emphasizes the systemic flaws in global economic policies and rising debt levels. While Gerli focuses on the housing market's internal dynamics, Casey underscores the interconnectedness of economic instability and geopolitical strife. both agree that caution and strategic preparation are essential, although they highlight very different threats and opportunities. Join us next time for more in-depth financial insights. Thanks for watching Financial News and Review for June 30th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.